Hello everyone, and welcome to part 2 of my personal finance series. In the previous video we talked about net worth. So this one is going to be all about budget.
Are you kidding me? A budget?
I can't stress enough why it is important to have a budget. Every business has one, and so should we. If you're living paycheck to paycheck and in debt, you absolutely need a budget.
You mean to tell me that people work their whole lives buying cars, clothes, homes, and material stuff where we're living check to check? We screwed. I needed a better plan.
Most experts agree you need at least 3 months of reserve in savings. That means you should be able to cover your bills if you lose your job for at least 3 months, if not 6, and some experts say 8 months.
Over 60% of the American population has under $1,000 in savings. What the hell?
The most important part of the budget is to be honest. It's all about finding where your money is going. And I encourage you to do this with your spouse and even include your kids, because things work way much better if you work as a team when it comes to your financial goals. We need to learn to identify and separate a need versus a want.
Figure $100 a month for clothes and shoes.
Figure 200. I want to look good.
But this video is really not going to be about addressing your money problems or fixing them. We'll start talking about ways to save and make more money in the next videos. This video will be about identifying where you're at now. Because once you understand that, everything will fall into place. A budget has to be dynamic. You have to treat it as a living, breathing organism. Some months you're going to make more money. Some months you're going to make less money. Some months you're going to have expenses. Unforeseen things are going to come up. Your budget should be able to accommodate for those things.
Okay, so what does that leave you with?
$200. So, no problem.
There is a problem. You haven't eaten yet.
And it's not set it and forget it. You have to check on it often and tweak it when necessary.
So it's never about budgeting. It's about being in control of your money.
So one of the ways you can start to track your spending is through mint.com. Mint.com is an online place, and this is for you millennials who like to have everything on your iPhone or your iPads. All your information will be stored in the cloud. People in my generation typically don't trust these type of things, although I have used stuff like this in the past. I prefer to use spreadsheets so I can have better control, and I just like it better. But mint.com, from the people from Intuit, is the #1 online financial software. It's completely free. You can not only track your spending habits, but you can also pay bills with it. You can set up automatic payment of your bills, and you can also check your credit score. Of course, they're going to advertise to you like crazy. That's how they generate revenue, but they're not going to charge you for the service. Now, I'm not going to go through a review of it because I don't have an account. I don't plan on getting an account. Maybe in the future. But check it out for yourself. Like I said, it's free to join. You can check your credit score. You can see everything on all your devices. And it is very secure. And they seem to take security very seriously. So I'm going to be taking you through a spreadsheet, a budget spreadsheet calculator that will really help the budgeting process. Vertex42.com has a ton of different spreadsheets that you can download and use for all sorts of different financial situations. So the budget spreadsheet I'm going to be going over today is from Vertex42. I'll leave a link in the description to the spreadsheet that we're using, the exact link to it, or you can just head on over there and find it yourself. Okay, so this is our budget spreadsheet. Hopefully you were able to download this. I've got it in LibreOffice, which is the office that comes with Linux. You may have it on Windows or Microsoft Excel. They all pretty much work the same way. So you should be able to follow along. I zoomed in a bit, so hopefully you can read the numbers okay. But what I'm going to do is I'm going to preserve this original one that came with it, so in case you want to go back and use it as the original. So what I'm going to do is I'm going to right click on the cash flow tab here at the bottom, and I'm going to click copy sheet, move or copy sheet. I'm going to click copy, and it's called cash flow 2. Hit OK, and you can see now I have another tab which is a duplicate of this one. So now we can modify this one and still have our original. Alright, so we're going to be using the cash flow. I'll just adjust these. We'll do the cash flow 2. That's the one we're going to be modifying. So, alright, so if you know anything about spreadsheets, spreadsheets are good for tracking things because everything's divided into separate cells. And it's also great for mathematics and for accounting because there's formulas that you can do, and the person who set up this original spreadsheet was nice enough to do all the math for us, including the dates. So, and as you can see, the dates are set up in a way that it's set up for 2017. So that's the first thing we're gonna change. You can see the very top one is not hard coded. So there, any other one I click on, you can see the math here. See the math at the top. So we don't want to change any of those cells. We want to avoid that if at all possible. If you avoid it, if you manage to delete a cell that has math in it or modify it by accident, if you hit escape, it should get you out of there. If you, let's say I deleted it by accident, it kind of screws everything up. Control Z will usually bail you out. That's undo, or you can do edit undo in the toolbar. So, but you want to make sure you preserve the math, because that's where the magic happens. But the very first cell here, the one that has a box in it, lets you change the date. You can see it has somebody manually put the date in there. So I'm going to go ahead and I'm going to start with the month. This month is September. I'm going to start with the previous month, and I'll explain why in a minute. So we're going to start with 8/1, the beginning of the month, 2018. All right, and that's going to modify everything else. So sometimes you'll get these number signs here. That usually means the cell is too small, so you can't read the contents. So I'm just going to expand these columns a little bit, and then everything should fall into place. All right, so you can see I auto-populated all the months for me. It figured out some months have 30 days, other months have 31 days. That's all figured out for us. So obviously this column, the C column, is for August. The D column, we're going to be tracking everything for September, and so on and so forth. So this first column, the reason why I went back a month is we're going to go back and we're going to look at our account, our checking account, and we're going to see where our money's going. We're going to go through the entire month of August, and where you're going to, I'm just going to make up numbers, but you're going to, I've already done this for myself, and you're going to figure out where your money's going, and you're going to track it. In some cases you will find you have stuff in here that you can put it in, like car payments and credit card payments, and sometimes it breaks it down into student loan, consumer loan, car payments. If you need to, if some stuff you don't need, you can delete it, or you can replace it with stuff that may not be in here that you have. So you really want to make this as detailed and as personal to your situation as you can. Alright, so the beginning cash balance is another cell that you can type in. As you can see, it has a box surrounding it telling you that it's, it's something that you can enter into. So this would be your starting balance of the beginning of August. If you don't know what that was, if you can't figure that out, you can guesstimate it, is fine, or you can just start with 0. It's not going to really make that much of a difference. But as you can see, the way the math works is it carries the balance or the deficit over to the next month. So you can see your money progressing as time goes on. Alright, so sticking with August, let's say we've got a bunch of numbers. So under inflows, this is going to be all the money you made. Outflows is going to be all your bills and expenses. So let's say we have one job, right? To keep it simple. In our job, we made $1,750 for the month. You can also add in interest and dividends from your retirement accounts if you want to. That may muddy the waters a bit, especially when it comes to figuring out your budget and what you can afford, because usually interest and dividends stay in your retirement account. It's not actually something that you can use to, that you want to use to spend bills with. Same goes with Social Security benefits, retirement benefits. You can track that if you want, but for our case, we can either leave it blank or we can just delete it to make things more simple. So we'll delete all the retirement stuff. You've got other income. Let's say somebody gave you a gift, $100 that month. You can track that as well. Gifts received, tax returns, scholarships or grants, whatever applies to you, you can put that in there. But just know that inflows is money you received. Alright, so for outflows, we're not going to worry about FICA, Social Security. This would be the deductions from your paycheck. Same thing with federal, state tax. We don't really need to be tracking that for budget purposes, because we really just want to know where our money's going and what can we afford and how do we keep the money we earn, and how do we earn more of the money that we're earning. 401k contributions, you can track that if you want. Business expenses, let's say everyone has a car payment, right? Let's say you're paying $250 for a car payment. Credit card payment, $100. That's how much you're paying for all your credit cards each month. Consumer loan, student loan, let's say you've got student loans and you're paying $25 a month. Gas for your car, let's say $100. I'm just spitballing numbers here. Auto maintenance, child care, cleaning, clothing. What did you spend on clothing this month? $25 maybe? Pocket money, how much money did you pull out from the ATM? $50. Education, entertainment, eating out. We went out to dinner. We had drinks with the boys. $100. And insurance payment, disability, health. This is all life insurance, home maintenance, furniture, appliances, property taxes. Again, we're not concerned about that. Rent, if you're paying rent. Did they have mortgage up here? No mortgage. So we'll say, let's say we're spending $900 on our mortgage. We had no medical expenses. Utilities, internet. We paid $30 for internet. Vacation and travel. We didn't go anywhere. Emergency fund. Debt snowball, we'll get into that later. College fund for the kids. I'm going to put $10 away for the kids so they can go to college someday. Alright, so what did we learn here? We got our total outflows was $3,350 for the month of August. Now this is real data. This is not projected data. This is based on actual data that I would have pulled from, or you would have pulled from your checking account statement, and it's telling us that we're negative $1,500. We got a major problem. That means in order to pay for this stuff, I had to dip into credit. Not good, not good. Especially when a lot of these are recurring payments, so they're not one-time payments for the month of August. This is stuff that we're going to have to pay every single month. So if you do this and you take the time, do this correctly, it's going to be very eye-opening to see where your money is actually going. So right off the bat, this tells us we got to cut $1,500 somewhere. So you're going to go through some exercises to reduce some of this or earn more money. So let's just say, for the sake of argument, that we're earning $2,000 more than what we have. So we're just going to tack on to our wages and tips that we earned $37.50. So we're going to go back down here and see now we have a surplus of $300. That $300 carries over to the next month, right? And that gets added on to whatever we earned in our inflows for that month. So for the month of August, at least now we have a baseline that we're at least in the positive. You always want to be in the positive or else you're dipping into credit. So now September rolls around, and as some of these things that if you know what your payment is, like you know what your mortgage payment is going to be every month, you come down to right here, mortgage payments. They already put in here $1,100, so it's already populated. So you can put in $1,100 all the way through. You can sort of fill that out ahead of time. Rent, there's no need to pay rent if you have a mortgage, right? So we just earned ourselves $900 more per month. So now we're positive $1,200 because we made a little mistake. We were paying rent and mortgage. Why would we want to do that? So for everything else that, let's say, clothing and cleaning and you had to get your car fixed, all that stuff you're gonna put in here. That's gonna vary each month. So as this stuff comes in, and you can wait to the end of the month to fill this in, or you can fill it in as you go. But you're gonna keep a running budget as these payments come in. You know, car payment $250. Auto maintenance, I had my car fixed, cost me $300 to get my car fixed in September. All that stuff's going to go in here. And at the very end, you're going to see this month I'm negative $580. That's going to carry on. It deducts from the previous ending cash balance. So it carried over, you were positive $1,200 in the month of August. So it carried that over to September. Since you were negative $580, it deducted it from the $1,200. Now your ending cash balance for the month of September is $620. Even though you were in the negative for the month for your budget, you're still positive because you had a running balance from the month before. I think this is a really great way to track your income and your expenses and get a handle. This is going to be your financial report card. This will tell you the truth. This will not lie to you. Use this to your advantage. And you're going to keep coming back to this for some of the other exercises we're going to do later on. Okay, so what did we learn? This should have been very eye-opening for you if you actually did the exercise. And if you're like 99.9% of the population, you've learned that you need to make more money. Am I right? And we're going to start getting into that in the next segments. Now that the hard part is over, we get to dive into the fun stuff. So in part 3, we're going to get into ways to save money, which is pretty much the same thing as making more money, as you'll come to find out. And we're going to keep coming back to the budget spreadsheet. So it's really important that you do the exercise for yourself. So don't forget, if you liked the video, please hit the thumbs up button and leave a comment. Let me know what you think of this series. Is it useful? Is it helpful? Because as of this moment, not all the videos are done yet. So your comments and your motivation actually keep me going. So make sure you're leaving a comment. So that's all for now. Thanks for watching. Stay profitable, my friends, and we'll see you in the next video.